Is Costco stock a buy at current valuations? That's the question I'm going to look into in this video here, looking at the company's revenue, valuation, profit margin, and a host of other important financial metrics. So let's jump right in, starting with revenue. And what you'll notice is over the last decade, Costco has done a nice job increasing its revenue from a little over 100 billion all the way up more than 235 billion in the most recent update. Costco, while it does have an international presence, it's mostly located in North America, in the US for the most part. It has opportunity to expand more locations. It's only got a little over 800 locations. And so it can expand further by not only increasing same-store sales growth, but also adding new locations worldwide. To put it into context, Target has over, well, roughly around 2,000 locations in the US. Costco is around 800. So just in the US alone, it has room it can expand to. But Costco benefits from that, right? If you've ever been to a Costco, there's like 78 people in one aisle and you can hardly move around. But that's benefiting for Costco because then there's more sales per store because they generate greater activity. They can pack those stores in with inventory, generate more sales. They don't have to add a new location for that. However, there's only a limit to how far you can push that, right? That starts to create inconvenience for customers when they go shopping at their stores, right? For me, I dislike going inside a Costco for that very reason. There's never room to maneuver your shopping cart around. There's just too many people. I've tried several times going to a Costco store. It's always packed. And so while it's beneficial from a store perspective, it's not so much from a customer perspective. And how much will customers be willing to tolerate given that they're paying an annual membership fee to shop at a Costco, right? You're paying either $60 or $120 annually for the privilege to shop at a Costco. And so if your shopping experience is not wonderful, you're going to look elsewhere. However, that being said, Costco provides best in class prices. They've got some of the lowest prices on comparable products. And so that's why people are willing to pay that membership fee and tolerate that shopping experience to have the privilege of shopping at a Costco wholesale warehouse. The next thing I wanted to look at is Costco's operating income. And like I mentioned earlier, Costco offers some of the lowest prices. And so its operating profits are never excessive, right? 7.8 billion in operating income is a considerable sum, and it's more than double the 3 billion it earned in 2014. But if you divide that 7.8 billion with the 235 billion in revenue it generated, you'll notice that it's a less than 4% operating profit margin. So very, very thin operating profit margins for Costco, and it thrives on that, right? That's one of the most difficult business models to execute, is that low profit, high volume business model, because you've got to be good, you've got to be excellent at all other parts of your business: logistics, procurement, distribution. All of that you've got to be pristine on in order to execute this business model. And to its credit, Costco has been excellent in that regard for decades. And so it is a best in class merchant without a doubt. And you can see that in this evidence I'm going to show you here. So what I have pulled up here is the inventory turnover ratio, or how often an item gets sold by respective retailers. And I've got here Costco, Walmart, Target, and the Home Depot, some of its main competitors, some of its main rivals. And you can see Costco's inventory turnover ratio has always been well ahead of the competition. 13.61 most recently compared to 10.70 at Walmart. And you might argue that Walmart has lower prices than Costco, yet Costco generates better inventory turnover than Walmart. Interesting. And Walmart mostly, some part of its business, the Sam's Club part, you've got to pay a membership, but for the rest of its stores, no membership fee required, and still generating a lower inventory turnover compared to Costco, even though it addresses many more customers than Costco does. Costco limits its customer base to members. And so even though it restricts its customer base, it's still beating the competition by a wide margin, almost double, more than double that of Home Depot, almost double that of Target. And you can see the genius of the business model here. The lower prices, low profit margin, but just selling it more and more often, right? They prefer to make a lower profit on the same item but sell it more frequently versus some of their rivals who might prefer to sell an item at a higher profit but sell it less frequently. The next thing I wanted to look at is its cash flow from operations and total inventory, because inventory has been an issue for retailers lately. They overinvested in inventory following the pandemic and the supply chain shortages. And so now they're having a difficult time getting through that overinvestment. And Costco is also experiencing that. It's got 16.3 billion in inventory, down from the peak, but still well above historically high levels, right? And then you look at cash flow from operations, 9.8 billion. This inventory might become more of an issue as consumers have diverted more of their spending to services, and as inflation is starting to bite consumer budgets. People are not buying those discretionary items as frequently as they were during the earlier stages of 2021, 2020 even. And so this might be difficult for Costco to sell this inventory without offering lower prices. And finally, I wanted to look at valuation. Using this metric, the forward price to earnings, Costco is trading at a forward PE of 35.5, which is quite expensive for a brick and mortar retailer. More expensive than its competition I noted earlier by a wide margin as well. I haven't pulled up those ratios here, but if I were to pull up, Target, Walmart, Home Depot, their their price to earnings valuations, they would be much cheaper than Costco is trading at now. So if I was to answer, is Costco stock a buy right now? I would say no, because it's too expensive. Sure, it's an excellent retailer, best in class. It's done an excellent job for decades, although the price you're having to pay for that excellence is a little bit rich. You're having to pay too much to get that excellent retailer. So for that reason, I would say it's more of a hold and wait for a better entry price to get into Costco stock.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.